What's going on, everyone? Let's take a look at the NASDAQ 100, which is going to be the Triple Q's ETF. Now, first off, I want to start off by saying thank you for coming to the channel. Welcome. I hope you guys enjoy the video as well as the technical analysis. So, I'm just going to start off by saying hell of a day, right? So I was not expecting the move that we had today, not only to the upside, but to the pre-market, kind of yesterday's after hours Tesla, explosion, just downward turn. I think Tesla at one point was down 14, 15 handles on the day, and kind of really brought the whole market down. So if we kind of look at the tape here and kind of see what we got going on the triple Qs, what we're looking at here is the daily time frame. Now, yesterday we came down and tested the 200-day moving average. Now, I was telling a lot of people in Discord yesterday on the live voice chat, as well as, in the text channels, 293, 293, 293, that was a big level. Why 293? You can kind of see this yellow line that I have on my screen here. That's the 200-day moving average. We tested that. Now, what I was hoping for today is that the market gapped up, right? Or even opened flat. Or when the bell rings, we get a little bit of a slight push higher. We kind of get stuffed into those 60-minute supply channels and then kind of roll over. That would have presented a fantastic, pretty much all-day move to the downside on a ton of names, including the stock that I love to trade the most, which was Tesla. But obviously, we kind of knew that those, that option was negated, as soon as we really started to see Tesla sell off. If any of you guys kind of tuned in and watched the investor day, with Tesla and Elon, he said nothing new, nothing that hasn't been said on previous conference calls. We've gotten hints of a lot of things that were said, and there wasn't nothing too revolutionary, right, that came out of that meeting. Half the meeting, half the conference, he looked like he was ready to fall asleep, this, that, and the other. That's besides the point. So immediately, when you wake up this morning, a lot of these levels were washed out in the pre-market, which means that, especially to all of you newer traders, you cannot go shorting into the hole. And what that means is if we have an aggressive gap down or an aggressive sell-off in the after hours or pre-market, as soon as the bell rings, those early shorts that try to jump on the move just because they see us falling off the cliff or they see us breaking, to all-time highs, get trapped 9 times out of 10. And if you did try to short within the first 5 to 30 minutes of the market, within the first hour, let's say, more than likely you got trapped 100%, because the move pretty much just kind of went sideways for 3 hours and then absolutely exploded the last couple of hours of the market open. So one thing that I do kind of want to point out here with the big tech, we still have some names that are trading down at the bottom of their ranges, which still look like they could be short positions if this was just, kind of a low pump day on lower volume. If we kind of look at the volume bars down at the bottom, today's volume wasn't too significant, for the move, right? It's lower volume than we had yesterday, and definitely lower volume than we had going back 3 or 4 or 5 days ago. So, you always have to be a little cautious, a little bit wary when we do kind of ramp up on lower volume. We ran and closed right at supply. Now, I'm going to give the bulls one hell of a round of applause. As we came down into this area here and lost this 200-day moving average here in the pre-markets, kind of gapped down, we hit that 288 mark, 286 almost, and we came down. If we would have ran into this hourly supply here, and I'll show you the chart in just a minute here. Let's just get to the chart now. If we kind of look at these hourly candles, right, just going back to after hours and pre-market, you can see we kind of just floated down, touching lows of 288.20. And then right as the market started to open, we got a little bit of a bounce. So what I was essentially looking for here was some type of rejection here at around 289 or here at around 290. This was a big level, right? This was the big level on the daily chart, the 290. So if we broke this level, got stuffed like we did here, right, where we kind of traded right at that 290 area, the bulls and the bears were really fighting for quite some time here at this area. What I was expecting is that if we rolled over, this was going to present a sneaky area here to short back down into 288, along with a lot of tickers. And if we lost 288, come down to test that 50-day moving average at 285. And lo and behold, 1, 2, 3, 4 hours after the market opens here at 10 a.m. Pacific Standard Time, not only did we explode, but we exploded right into this 1 hour 50-day moving average and continue to break out of this channel. And obviously here in the after hours, we're kind of just back testing this whole channel here. So if we go back to the daily chart and see kind of where that puts us, we can kind of see here that we did reconfirm the 5-day moving average, which is short-term sentiment. However, we stopped exactly to a T at this LR50 channel. Now we have the 10-day moving average sitting at around 295.33. Here's what I want to tell everyone. If we get some aggressive gap open tomorrow, where we kind of gap open over 295 over this 10-day moving average, and we get into this channel, be careful with going long right off the bat. Last thing we want to do is get stuffed into supply and then roll over and finish on an inside bar day to kind of end the week, and you're chasing longs and you just end up getting crushed, you know, throughout the midday chop. What we would ultimately like to see is a flat open or a slightly down open. Okay, get the initial washout or the initial consolidation off the bell and then ramp through these levels. If we can push solid and close over this 296 295 area, we've got clear skies into 300 for next week, which would sort of break this downtrend. If we can kind of look here at this last recent high that we had on February the 2nd, followed by this lower high, followed by this lower high, if we can finally start to break out over 300, this is going to push aside this short-term kind of consolidation, the short-term back test, and we could be looking at 313 very, very quickly over the next 2 to 3 weeks. That would be ideal in the best possible outcome for the bulls. Now for the bears, what we want to see is an aggressive gap open that immediately gets stuffed within the first 1 to 2 hours, consolidate for maybe 1 or 2 hours, and then start to roll over. At any point in time between now and going forward, if the bulls start to lose the bottom of this channel, which is all of this price action that we have going all the way back to January of this year of 2023, which is almost 2 months now, this is going to break our uptrend. We will test 285, which is the 50-day moving average, and any close below that 285 and 50-day moving average, we could be coming back down towards 282.14, and anything below 282.14 is an absolute free fall into 240s, 250s. So how are we going to play this into tomorrow? I'm going to keep it very, very simple. There's some names that still look good short, which I'm going to put on my watch list for the Evolution traders. Those names that look good short, if we gap open or we push higher off the bell, I'm going to look for a rejection and those stocks to lose their bottom channels today and short those through their lows. I still have to go through and kind of continue looking at some charts here, but the top stock on my watch that really didn't pull back all that much through this whole kind of downturn is Nvidia. Nvidia through today's highs could look at 242, 245 tomorrow. If the market wants to continue, that's going to be my number one play to the long side, is going to be Nvidia. It's the strongest chart. It's when the market is pulling back and the market is weak and not rallying, you want to look to the names. What did they do when the market was pulling back? Nvidia pulled back, yes, but it tested that 10-day moving average, held it perfectly, and as everything bounced today, went all the way back up to the top of its channel, right around that 232, 233 area. So we're very, very close to pushing into the 240s on Nvidia, and you want to play the names long that have been strong. You don't want to take something that's at the bottom of the channel, and if the market is pushing higher, take that one to try to fight through all of this supply. You want a stock that was strong through the downturn that has just kind of been resting, going sideways, which is exactly what Nvidia has been doing. It's been resting very, very casually and ready for a liftoff. That's my analysis on the triple Qs. That's my analysis for tomorrow, Friday, which is going to be the 3rd of March. I hope you guys all enjoyed this video. If you guys want to learn how to trade these channels, learn how to trade these pivots, understand technical analysis, because if you don't understand technical analysis will absolutely run you over. If you want to get up to date on everything and how I trade, visit evolutiontraders.com, and I will see you guys all in the next video.